with regards to margins and competition in the banking, in Australian banking. So we've seen, I'm a global investor. I'm looking at the Australian banks. They're somewhat more expensive than global banks. But just a question on competition, and has the intensity kind of eased off? Is there expectation that that'll ease off on the mortgages and deposits and what have you? And what signs are you kind of seeing at the moment?
Yeah, I'll take that in two parts of the balance sheet. So if we look at the deposit side or the liability side of the balance sheet, they're definitely under a fair bit of pressure to refinance things for the term funding facility to additionally fund their lending. And one of the concerns, or one of the issues, has been actually a mix from transactional to sort of term deposit accounts as well. Some of that we believe has started to be priced in, and on that side we may start to see a bit of easing, and Shane Elliott alluded to that on a call today a little bit as well. On the lending side though, there are some signs that two of the major banks here have eased off on the competitive landscape, so particularly CBA and NAB have stepped back out of the cashbacks. Probably, we're talking three or 4 months ago, and that's taken some of their competitive intensity. Having said that, we've got Westpac and ANZ being very aggressive on the lending side to grow market share after a pretty torrid period of time. So I think it feels a little bit like actually the competitive environment's got at the margin worse over the last 6 months because of that. We've had two of the major competitors kind of pull back a little bit, and the other two competitors are really going for it on the lending, and there's a real risk that when CBA re-enter the market that we end up in a bit of a competitive spiral. I hope that answered your question, Jordan.
Yes, thank you.
Can I just ask you, Jason, because everything that you mentioned in terms of the answer to Geordie, everything that you mentioned in your answers to me, it appears to be that you're a little bit bearish on the banks, at least over the course of the next 12 months. And in terms of where you would be allocating, or where you do like, or where you do have conviction for anyone looking to invest in Australia, where is it then, if not the banks?
One of the sectors we do like, and have liked for a while, is insurance. So we generally like the general insurers. We think there's good potential for earnings recovery and margin improvement as we get the peak inflationary pressures over the next 12, 24 months to wash through the books, but the premium growth to kind of earn through, and we think that they should be benefits. We also like some of the healthcare names, although they've been whacked around a fair bit on some of the concerns around GLP-1s and Novo Nordisk and the like overseas, really kind of weighing on their share prices. But there's a few of them that we do like, CSL and CSL's a one we do like, and then more broadly as well, we do still like the resources landscape for over the next few years, and we've actually seen the major iron ore producers do quite well on the back of higher commodity prices more recently. We expect as much as anyone can have a great degree of confidence, but it feels like we're got a favourable backdrop over the next few months for the iron ore names as well.